Now a look at business news. Asian stock markets made a strong 2011 start Monday with Seoul hitting a record high as traders looked forward to a healthy year ahead, although several major markets were closed for holidays. Dealers digested Chinese data pointing to a slight cooling in the world's second biggest economy, while the greenback picked up against major currencies after suffering a three-day sell-off last week. Seoul ended 0.93% or 19.08 points up at 2070.08, its best ever finish as dealers welcome data showing manufacturing activity hit a 7-month high. Hong Kong closed 1.7% or 400.60 points higher at 23,436.05. Singapore added 1.43% or 45.73 points to end at 3,235.77 after figures show the economy had grown its strongest rate ever last year. Mumbai's Sensex was 0.5% up in the afternoon. Australia, Tokyo, Shanghai, Wellington and Bangkok were closed for public holidays. Castor Peng, research director at Sinda International in Hong Kong, predicted a strong start to the year for the markets. Markets ended 2010 in a strong position with the most around two highs after clawing back losses suffered in the wake of the global financial crisis. Channel News Asia reports that export-dependent economies in Asia such as Singapore, Taiwan and Thailand are likely to see moderation in economic growth in the first half of 2011. It said more internally focused domestic-driven led economies such as Indonesia are expected by analysts to witness a quickening of growth. This comes after Singapore, a bellwether of export growth in the region, achieved a record 14.7% GDP growth last year on the back of strong pharmaceutical output in inventory and restocking in electronics globally. Demand for Asian exports is expected to moderate in the first half of the year as holiday season demand peters out. An indication of that came on Monday in China's Purchasing Managers Index, which fell to 53.9% in December, down from 55.2 in November. The United States Institute of Supply Management's PMI has also been moving sideways for the past 5 months and dipped to 56.6% in November, down from 56.9 in October.